All right, moving right along in our home buying process course, underwriting full approval. What does it take to get approved for a loan? So earlier I had mentioned a pre-approval if you're watching this video in order. But now you got to get it approved. Just because you're pre-approved does not guarantee anything. Getting full approval for a loan typically involves several key factors that lenders consider when evaluating your application, such as credit, income, debt to income ratio, the loan amount, your down payment. Do you have 3%, 3.5%, 20%, 10, 50? Loan terms, interest rate, and payment history. So a lot goes into this. To improve your chances of a full approval, work on maintaining good credit history, managing your debts, and demonstrating a stable income. If you're not sure if you're going to be able to be pre-approved for a loan, go ahead and reach out to your agent or myself, and we'd be happy to help get the process started. Now, what are the conditions? To qualify for a mortgage loan, you'll need to meet certain criteria, including you need to have a stable income. If you're an independent contractor, that's okay. They can deal with that as well. Or maybe you just started a new job because you just left your current job. It could be a hiccup, but maybe you can already prove your new job is going to pay you even better. There's letters the lender will request from your new employer, something like that. So don't let it discourage you. Still something to look into, but make sure you have stable income. If you've been at your job for a few years, that's probably best. You need a strong credit score. The better your credit score, the better the rate you're going to get and the more likely chance you're going to get approved. A modest debt to income ratio, meaning you can't have 20 credit cards maxed out and you're barely making the minimal payment. Okay, that's extreme, but that's basically what that is. You're going to need documentation of your employment and assets, proof of income for at least 2 years, down payment, and a credit score of at least 620. Now, other conditions may be proof of a mortgage insurance, appraisal that exceeds a certain value, termite inspection might be needed, title commitment, and recent bank statements. I'm going to tell you right now, everyone complains. It's a hassle. I buy new homes all the time. I literally hate going through it, but it just has to be done. And you'll even get to a point like, I thought I already sent you this. You're going to send it again. They have to do last minute checks to make sure you're still employed. You didn't just quit your job 3 days before closing, which, by the way, I had somebody do, not 3 days, but we're midway through and the wife decides to quit her job. And she was a huge part of it. You try to educate people, but for some reason she didn't think that would matter. It mattered. They could not buy a house then. The whole deal fell apart. That's why lenders check. Sometimes just human error, people just don't realize. Now, full approval means for a home loan means underwriting has deemed the buyer qualified for the loan amount and is trusted to pay back the loan. Full approval is final and is given once all the necessary documentation has been assessed and processed. Basically, we want to hear that clear to close. Can you be rejected after being pre-approved? Absolutely. Like I said, they're going to keep checking to make sure you didn't just go out and quit your job or, bought a new car, certain things like that. It's just don't even breathe. Once you're under contract, you've been approved, don't do that thing. Because even though you've been approved, there's not a 100% guarantee you'll successfully get finances. Mortgages can get denied. Real estate deals can fall apart even after the buyer is pre-approved. And again, several factors is financial, property-related issues. If the property is not up to the bank's criteria, they're not going to invest in something that's falling apart. Documentation, credit scores change, employment changes. Just once you're approved, don't do anything. If you want to do something, talk to your agent or your lender. But talk to me. Don't do anything. So what not to do when buying a home? You should avoid changing jobs, quitting your job, or becoming self-employed during the loan process. Don't do anything. Lying on your loan application, I assure you they will catch it. Buying a car, leasing a new car, no major purchases. I've had people like, I went and bought the new furniture for my new home. Nope, you just killed the deal. Here's what you can do. Put it in your Amazon cart if it's something you can buy on Amazon. I've had many people, day we close, hit order. I know it's exciting and you want to start shopping. You can't. You can pretend shop, you can put it in somewhere, and do not let the furniture or car dealers talk you otherwise. They don't care. They're worried about making that sale. Do not do anything. Do not apply for new credit cards. Don't change your bank. Don't open new credit. Don't close existing accounts. Don't pay off a credit. Don't do anything. I mean, when I say anything, anything. Don't make credit inquiries. At the beginning, you're shopping around different lenders. That's okay as long as it's in like a 30-day period. It's called a soft pull on your credit. They know you're looking for a lender. Okay, so that's different. Again, I can help you with that. Don't miss any payments and don't move money around. Don't do anything. It's essential to maintain your financial stability and avoid making any significant changes to your finances between pre-approval and closing to increase your chances of final loan payment. When in doubt, don't do it. Just don't buy it, don't change it, don't close it, don't open it. Additionally, working with a reputable lender and carefully reviewing the terms and conditions of your pre-approval can help you better understand your potential risks.